Our third and last presenter, Mr. Jamzidi Khalid, will be sharing his insights on 2021 currency outlook. Mr. Jamzidi Khalid, better known as JK, is the Deputy Managing Director of Wholesale Banking and Head of Group Treasury Markets at AmBank Group. He has over 18 years of banking experience across foreign banks, including, among others, Standard Chartered Bank, ABN AMRO, and Deutsche Bank, and is currently responsible for the group's treasury and markets related activities covering trading, sales, and liquidity management. JK is also a committee member of the Financial Markets Association Malaysia, FMAM, and Financial Markets Committee, which was set up by Bank Negara Malaysia to promote developments in the Malaysian financial market. Now, please welcome JK.
Thank you very much. I hope you all can hear me clearly, right? So I'm just trying to navigate with all this new digital, and good morning to everybody for dialing in. I appreciate the time and your time, and I'm hoping that maybe we don't have any glitches as we had earlier with Anthony. Now, I'm trying to kind of navigate my way through here with regards to currency outlook, and it's going to be a very difficult one. I've got assigned sort of 15 minutes to cover, and I thought maybe broadly 3 slides will probably be enough. But I just wanted to start off again with the fact that, you know, you see, people may have forget in given the whole COVID situation, is that now we've only passed the first year anniversary of COVID. I think back in 17 November last year, it was the first case came about in China. And we've gone 1 full year past that already, and now it's hit the global, the countries and the global markets, and it's having a huge impact on all of us today. So taking that into picture, I've looked at dollar ringgit in the currency market for many years already. And it's becoming increasingly difficult because, if you think about it, there are far too many black swan events. I'm sorry, I was just told that my video camera is not on. So good morning again. So forecasting dollar ringgit is very difficult these days. And far too many black swan events. I think that, if you recall, before this, we had the Trump issue. We've had many Trump issues, rather. We've had the Brexit issue, and now obviously COVID. So history doesn't quite repeat itself, but in the next few slides, what I'm trying to make everybody to kind of understand what effects basically has taken and has shaped our market. And I think maybe perhaps with those information in place and on hand, we can then navigate to then see what will come next. Yeah. So the whole point of this particular portion of the session is actually to give an outlook. But let's have a look again in terms of historical standpoint, in terms of what had happened earlier this year. So if you look at the chart in front of you today, there are 4 lines basically. Yellow is KLCI, OPR is in blue, dollar ringgit, which is our currency, is in red, and volatility index, which is in gray. So these are the 4 key areas which I thought maybe perhaps kind of summarize the whole year that we've had through so far. If you notice that it all started off not with COVID so much. I know COVID started off in 17th of November in 2019, but really what caused our financial market to be substantially disrupted was actually it started off with the local politics. The situation on the Sheraton move in late February, and the new PM was announced in 1st of March. So that gave a lot of uncertainty to us and also to the ringgit market itself. As you can see from the red chart itself, it kind of dollar ringgit moved up from 409 at the start of the year and went as high as 445. And that's at the peak of where the COVID came about, and we introduced MCO and whatnot. Yeah. The volatility index jumped almost 500% since the start of the year. It started off close to 14 level and it spiked all the way up to 83. That gives you a sign that things are not quite stable in the market. So, and what has caused it? Really, like I said, the change of government. We had the MCO, which was first introduced because the cases were alarmingly high, and then you had Bank Negara come out with their GDP forecast, and the GDP forecast was initially between minus 0.5% to 2%, but then it got revised to minus 3.5% to minus 5.5%. So really, I think the whole corporate earnings outlook also changed dramatically because of COVID, because of MCO has been introduced, and that as a result of that, a lot of businesses suffered. Yeah, so KLCI dropped, as you all know, by massively. I think from 1,600 or close to 1,600, 1,588, and dropped all the way down to 1,200, which is, I like to point out, 11-year low from a KLCI standpoint. Yeah. OPR cut, and Bank Negara battled with this by introducing massive OPR cuts, four OPR cuts totaling to 125 basis points or 1.25%, from 3% to where we are today at 1.75%. Now, could there be more? And we can talk about it a bit later. But really, these Bank Negara cuts is unprecedented. And if you look at it in the past, I think back in the global financial crisis, OPR was cut to a level of 2%. So breaching 2% and going down lower to 1.75% is really, really low from a Bank Negara standpoint. Now the question is whether they have enough ammunition, and I personally believe they do. It's just a question of whether the ammunition is quite needed today to resurrect the economy from that standpoint. Yeah. Now, also, what caused the volatility, substantial volatility in our market, was that liquidity in the system was massively affected. As you know, COVID is a global pandemic issue. And that liquidity was restricted in some cases. So typically, financial banks, or banks are financial intermediaries, if you like, their main concern is to make sure that the banks are able to sustain through the period. So what happens is that the banks typically in the financial system starts hoarding liquidity or money to ensure that they are left with meeting all the liquidity requirements that the central banks would require them to be. And that leaves very little liquidity left in the system. And that pushed Bank Negara to reconsider about relaxation of liquidity requirements for the banks. Yeah. So Bank Negara introduced not only the OPR cut, but relaxation in terms of liquidity risk calculation or liquidity requirements from a bank standpoint, and that they've relaxed that massively in light of the pandemic. Yeah, and this is extended until May next year. So as a result of that, you have a massive inflow of liquidity back in the system to calm the market. So today, you see that the volatility index have dramatically fallen from its peak, and we hope that maybe it should still probably be around these levels. I think it shouldn't hover much the way it was before, because liquidity is ample, and Bank Negara has allowed for other liquidity measures to be put forth if, let's say, there is a requirement to do so. Can we move on to the next slide, please? Now, moving on, I guess as I mentioned before, this is coming to my second slide. Before we get on to where I think, or where we think the dollar ringgit currency outlook would be, or the forecast would be, these are the major things that you really need to look out for. And I put them in two major columns here. So first category would be ringgit positive. So ringgit positive meaning, dollar ringgit trending lower, and ringgit negative means basically dollar ringgit moving higher, right? And it's very, very difficult, as I mentioned earlier, to go and then say, where the dollar ringgit will be today or tomorrow. In fact, I think, but I like to highlight that these are the key areas that you need to put out and look out for. And any point in time, these are the ones that I think will move the dollar ringgit, whether negatively or positively, right? So of course, you've got the Biden victory in the US elections. And as a result of that, that was ringgit positive effect on dollar ringgit. Yeah, and it's largely because of the expectation that there will be better trade terms with China. While we have not seen the full effect of that, Biden's victory in the US presidential election is still, it's still, while it says, it's pretty much there, but I think they need to get around to getting Biden into the White House office first, and then proceed with his agenda with regards to the new government. Now, so Biden's victory is obviously going to be a good thing, and I think we need to put attention to its policies that he's going to be putting forth. Now, the other part was that the success of vaccine development. As you know, I think a few weeks ago, you had Pfizer come out with the vaccine development, and then you hear another manufacturer come out with another vaccine development, which is all positive for all of us. And I think we look forward towards that. But the issue is that the vaccine development today and the vaccine product is not out just yet for everybody to enjoy. I read a report saying that some of these things about the reach of the vaccine into countries is going to be of a question. And how do you supply from one country to the other? How much would it cost to a country to enable their country to be vaccinated? So these are the issues where we get a lot of hype about that it's coming to an end. The issue is that how fast is that delivery coming over to us? And I think that higher income countries such as ourselves, Malaysia, in our region, Malaysia, Singapore, Thailand, for instance, will get it hopefully by mid-2021, which is some of the reports that I hear. And then the lower income countries such as Indonesia, for instance, and Philippines will probably end up getting towards the end, or in fact, early 2022. So there's still a fair bit of time to go through still, so that we all get vaccinated. But the success of it is really positive from a ringgit standpoint. What it means is that now the risk on is really and it's gonna risk on, meaning emerging markets is going to be the beneficiaries of the movement of money. Now, higher commodity prices. I hear earlier there was a question about the CPO prices, and I think CPO today is trading around the region of about 3,500, and it started off, I think now, and it's above average. And the average for 2020 is about 2,600, and in average of in 2019 was 2,100, right? So certainly, I think there is higher commodity prices has a positive effect on us. However, I wanted to kind of put a bit of caution on this. Is obviously because the reason why some of the commodity prices have come up is also because of the MCO control and the amount of supply. So it's really a demand and supply sort of issue. And I think because of MCO has been introduced and whatnot, and the supply has somewhat been reduced, draws basically the prices up because of to meet the demand. So do we think that the CPO prices will be up in these levels? I think that really a lot of it is to do with demand versus supply. And if Anthony, I stand guided by Anthony saying it's 2,400, but certainly a stronger CPO price would have a stronger ringgit impact. Yeah. Now, the other thing that's also positive to us is also the interest rate differential between the US and the world. And the US, as you know, the policy rate is at 0% or close to 0%. And whereas if you were to compare to Malaysia, it's 1.75% today. So the interest rate differential between the two countries is positive to us because it invites money coming from lower interest rate countries into higher interest rate countries, such as us. So this is positive for us. And I think for as long as we kind of ensure that there is interest rate differential, we should be able to then have a positive effect on ringgit. There was a question earlier also with regards to RCEP. As you all know, and I've been reading about this and listening through APAC on the discussion with regard to RCEP, it's really the biggest free trade agreement that the world has ever seen. It involves 10 ASEAN countries and 5 other countries. And I think why this to me is a bit more different than what we've had before in terms of trade agreements is that it includes China, countries such as China, Japan, and South Korea. These are the main three big engines, if you like, in the Asian region. And I think that with the inclusion of these three countries and perhaps India, once they have signed it, I think India was left out, and I think they couldn't meet the deadline in terms of signing up the agreement. But if you have these three possibly in India in place, then you'd really have a really strong sort of environment to kind of move trade and pursue bigger trade and good quality services and products between the RCEP countries. And I think this is one that, previously, if you look at where we are today, you would know that if you were to do trade in a different country, that you'll have to go by certain jurisdictions, and there'll be jurisdictions that you have to comply with. Now, with our CEP, the agreement being signed and all that, we hope to see that there will be a more standardized approach between these 15 countries that we have today. So, and that will enable trade further. Yeah, so that obviously is a positive impact on Malaysia because we are part of the RCEP agreement between the countries. Yeah, so we're part of that, and it's really good to see that going through. And just jumping on, one of the areas that I think we all need to kind of pay attention to is the parliamentary approval on the Malaysian budget, and that's coming next week. And while we all talk about the budget in 2021, anything that goes against this particular budget in the parliaments will probably be negative impact on us. But if, let's say, the budget has been approved next week by the parliament, then that should enable us to then pursue the agenda of making sure that the economy recovers from this pandemic that we are through. So just keep your eye out. I mean, I think that the budget is going through the parliament next week on the 25th, and if it's approved, then it should be a ringgit positive impact. Yeah. Moving on to some of the concerns that I would have, or factors that I would have in mind that may affect negatively on our ringgit currency is obviously the failure of vaccine development. As I mentioned earlier, I think there was the issue about the reach of the vaccine, and also if there was any further mutation of the virus itself. We all don't know, really. That's the honest truth. And everybody is still learning about the COVID-19 virus. But if it continues to mutate and the number of cases go up, then you may have issues in terms of recovery globally, not just globally, but also here in Malaysia too, right? So what Anthony mentioned about GDP forecast of circa I think 6.5% to 7%, and we think that that's true, but that's on a base case basis. If, let's say, you have the vaccine issues of getting the vaccine over to Malaysia sooner than we expected, then you will err towards an expected growth of maybe 4%. Yeah. And if the vaccine comes earlier, then potentially you might see closer to 8 or 9%. So really depends on how fast the vaccine can be developed and can be delivered over to the countries such as ourselves. So that's something to kind of look out for. Business disruption because of MCO. Today, I'm pretty sure everybody's checking their MySejahtera app or keeping a close eye on how many cases that comes out from Malaysia on a daily basis. And I think that's a concern that if the cases continue to be on the rise and vaccine development is delayed, then you may have an issue of an MCO or some form of MCO being imposed again on the country. And if that's the case, then I think you may see a situation whereby the economy is going to be very badly hurt, and that will be obviously negative to us, because obviously what happens is that the money outside of money that is within the emerging markets such as ourselves in Malaysia will then flow out into risk-free or reserve currencies such as the US. Yeah. Um, Global oil prices, obviously, is we have been closely correlated to oil prices. I think the outlook, when I hear and speak to the oil and gas corporates that we speak to closely, we think that it's probably going to be hovering slightly north to where we are as the global economy picks up. Yeah, so I do think that there will be more positive than it is negative, but keep an eye out on global oil prices. Malaysian sovereign rating, obviously, and I think that point and the point after that with the political uncertainty is closely related. You know, COVID-19 is not a country-specific issue. The COVID-19 is a global affair. So because of that, the rating that we have will be taken into consideration of the issue that is more global in nature. But the political issue that we have today, the local political expectations in terms of uh, whether the current government can be validated or whether or not there will be a new government post the COVID-19, that will be an overhanging issue that we have today, and we need to resolve that quickly. If there is if there is no validation in terms of our political environment, then that may have an impact on our country's sovereign rating, yeah, which is currently already at the negative watch. Yeah, so a negative outcome on the sovereign rating may in fact be negative to the ringgit currency in itself. Um, Mentioned earlier about unexpected and bigger decline in Malaysia economic growth in 2021. That goes hand in hand with all the issues that I mentioned earlier. But on interest rate cuts, Anthony and we speak quite often about this, and I think that there is possibility of another rate cut, but I don't think so. It's coming in January, possibly at its earliest March, but even that I think is possible that is a bit too early. And the reason for that is that I think there has been a lot of stimulus has been pushed into the to the economy, and I think the budget would probably push that through to ensure that there is recovery in the country. But for all the interest rate cut that has been done by Bank Negara today, we would only see the benefit of that, and we have yet to see the benefit of that. So my point is, I think the interest rate cut is something that is that's already been provided for. It's not necessary today, and I think Bank Negara would take on a watchful stance to see whether or not there's any further rate cuts to be done. Now, additional budget requirement, of course, we've got the fiscal deficit that we have. We have got the budget ceiling in terms of financing ceiling for the country that's been lifted up to 60%. So that's something to kind of look out for. If the economy continues to worsen, there may be added stimulus that is required to kind of push through, and that may be negative for the ringgit market. Yeah. So in a nutshell, if we can move on to the next page, I've got this really, and it's short term and medium term. And you asked me what is short term and what is medium term. Short term, because of the situation that we are in today, right? And we had a lot of discussion on this. I think that short term is not meaningful enough for me to give you an outlook which is 12 months ahead. Okay, there are far too many factors, as I mentioned earlier. Short term to me, let's have a look at December end and where we will be. And I think the range that's provided here is between 405 to 410. Where are we today? We're at 409. Yeah, and I think that if, let's say, the budget gets approved by the parliament, then we might see dollar ringgit moving closer to 405. So these are the items that we need to kind of look out for, which could be positive to ringgit. So all those factors that that I've shown earlier, take a look at that. And if it's all moving towards positive, then you should see that the dollar ringgit moving in tandem towards the lower end of that range. Yeah. And medium term, and we debated about this internally, and we said that maybe perhaps the medium term approach is to look at where dollar ringgit will be in March. And we obviously put a wider range of between 408 to 415. But again, it really depends on the vaccine development, the reach, how fast the vaccine can reach the countries. How our CEP, we've heard a lot of good stuff about our CEP. but we've the initiatives that's going to come up from RCEP will be we need to put a close eye on that and see whether or not the momentum continues to pick up, and if so, then you would see that the dollar ringgit it should be trending closer to the 405, 408 level thereabouts in the medium term. That's all I have, and I hope that I'm happy to take on any questions whatsoever from the floor.